call this my bread and butter, and for many that I've traded with over the years, they know that I've done this multiple times over and over again. There's no real magic to it. It's a system that I have in place for big down days, which we had yesterday. So in this video, what we're going to talk about is how I traded SPX end of day move higher and caught these moves. The biggest gainer here was 221%, and then 171, 132. These actually moved a lot more than what you see here, but I do like to take profit as the move is playing out in front of me. So now, first of all, what I would say is, what is this strategy that I'm talking about? Right. So in order for me to kind of assess or show you what kind of trade this was, I would have to take a look at SPX yesterday. We are looking at the 10-minute chart, which is to the left, and then ES. That is very, very important to also show you here in order for you guys to understand the concept. And plain and simple, it's a failed breakdown play after a big down day. That is a combination that I feel is very, very powerful if you know what to look for and you trade it right. So what we're going to do here next is we're going to talk about the kind of day we had yesterday. And we're going to then get into my entries and exits. Okay, so stick around. SPX on the left here, you can see that we had a nice gap up, which saw a nice little continuation after the open. And this is the 10-minute chart. Once again, every candle that you see here is a 10-minute candle. We opened up and we saw a nice little move higher into 64.30, and we were unable to hold above, and we fell below 6,400. We attempted to recover the 6,400 or 6,400 level on SPX twice. So you can see that over here, we had a nice little move into 64.10, another move to 64.10. Now we had a nice little double top, and later on, we broke 400, 6,400, and we were unable to get back above, and bulls stepped in and pushed price lower. So that was the context for the entire day. What then followed was, and you can see here that I do have the 9 moving average on the 10-minute chart. That's this yellow line that you see here in my chart. You can see that it was a nice little trend day to the downside, right? We're riding the 9 on 10, which I call it. It's the 9 moving average on the 10-minute chart. We're riding it pretty much the entire move lower, especially once we broke this lower day and filled the gap. That's another significant area in the chart to point to, which was we closed right here at around the 6,368. We did see this gap up. The gap up play is another one that I've talked about in the past, but you're anticipating a potential gap fill. If that does not happen, you will see a rotation back to the upside, and you'll see a trend up day potentially. Sometimes you just chop around here. But if that gap gets filled, which we did here, you can see that over here, the gap got filled, but we're unable to turn around, right? We did not bounce to the upside. What happened is that we filled the gap and we broke lower. You can see that this little gap test over here, we attempted to get back up, that failed, and that was kind of the nail in the coffin for the bulls. We saw this tremendous move lower. Okay, so that's the context of the day. Now, that is RTH, or real trading hours. The way I trade SPX is that I do pay attention to the overnight session, because the overnight session does tell us a lot about what the players did, and there's a lot more information for us to trade around, as SPX does not trade during the overnight session, right? So for us as traders, the more information we have, the more informed decisions we can make as the market is playing out. So let's shift focus to the right over here. You can see that we put a overnight low at 6,360.25. That marked a tremendous reversal to the upside, and we saw 120 point squeeze into the 6,481. That was not sustainable, and we did not revisit that high again in the RTH session, so the real trading hours, or when the market is open, right? We did attempt to, but it just stopped short of that, about 10 points lower. And so that alone tells us that there is this slight weakness, or the bears are still around. Although we are gapping up, we have to be cautious. Once the market opened, so at 9:30, you can see this candle over here. And let me zoom in just so we can see it a little more clearly, if TradingView allows me to. This candle over here was the 9:30 open. So you can see this candle here is the 9:30 open. We did see a slight follow through to the upside, but the bears, or the shorts, piled in and pushed price lower. We saw consecutive 3 red candles in my charts. They're gray to the downside. And so you can see that illustrated over here in SPX. So what I'm trying to tell you here is that there is valuable information in the overnight session that is worth watching when SPX, or the RTH session, opens. And there's this synchronicity between the two, right? There's this symbiosis between the way ES moves and SPX moves during RTH, or between 9:30 and 4 p.m. So understanding this, we can start creating a plan, right? And there are a lot of different ways you could trade SPX, but in this instance, which is what we're going to focus on, there were a few ways of trading it. One was the inability to push into overnight highs and push higher, right? There is this approach where you could trade the failed breakout, or the look above and fail, which is when price pushes up into the overnight session, it fails to find a bid or buyers, and then you see this reversal. Now, that would have made this short easier for me personally. That's why I didn't take that short. You would want to see that attempt to push and fail. Now, what I did do was wait for the failed breakdown, which is the opposite of what a failed breakout is, right? It's opposite to a look above and fail. You can see it as a look below and fail, right? When sellers attempt to push lower and they fail. Okay, so those two concepts are correlated in opposite ways, but very similarly in terms of the concept of the mechanics. So we've had that kind of covered now. So we understand what we did overnight. We understand how we opened and what happened afterwards. We also understand that the gap fill was important, also a sign for us that what could come. Now, the gap fill area here is a potential bounce area and a potential long for me on SPX. But the selling pressure was so big here that we did not really see any significant bounce here. Maybe on the 2-minute or 5-minute chart. On the 10-minute, we did not really see that. We broke the gap price, or sorry, we filled the gap, we broke it, and the back test, which is very clear here, it's this green candle here with a wick up top. It attempted to push back in. That was the moment for the bulls. They failed, right? So you can see it's a tug of war between the bulls and the bears. It's an auction. And right now, the bears are winning, and they're pushing price lower. Now, you could have traded this short over here at the previous day closing price. The inability of pushing us higher was a short. Okay, so if you were watching that, that was it. That's this candle over here, I believe, which was the previous low as well from the first 30-minute range, which is the orb range, right? So the back test of the orb low could have been a short as well. But this video is not about that, but I do like to kind of point those things out because there are multiple ways of trading SPX, which I said earlier. What I would like to bring your attention to here, and this is kind of the last bit of this video, is the failed breakdown. So in order to understand that, we have to look at what happened overnight. You see that overnight session put in a reversal over here, 6,360. Now, that was overnight. What happened during RTH is that we actually revisited that. And this is when you have to start asking the questions, who will win this fight? Will the bears win, which would imply a further move lower? Or will the bears fail, which could also be looked at, will the bulls succeed in holding this important kind of this line in the sand? And look what happened. Now, the low of this candle over here, where the arrow is pointing, the low of that is 6,359.50. So you can see it's 0.75 below this low over here in the overnight session. So what's happened here? We swept the overnight lows. and we pushed back up into this previous range. All right, so this is a very clean, very clear, clean, very technically, perfect, I would say, failed breakdown. Now, if you do not trade futures, you could still participate because it is during market hour. And the time of which this sweep happened was around this 320. And we know, and there's another video that I've talked about this in the past on, which is the spike base. And so as you can see, it's all very correlated. The spike base happens in the last 45 minutes of the session to an hour. Okay, and I will try to link to that video in the description of this video. But during the last 45 minutes, you have to watch for a potential spike. And those often come once you build a base. But a failed breakdown, right, it becomes that base or that low or potential acceleration that you have to look for. So yesterday, and I don't have the tweets in front of me, but I did take a long. So my target was the 6,315. Looking at the daily, you'll be able to kind of decipher why I was watching 6,310, 6,315, and I saw that there's support here. Now, what's important to kind of see here or look at is that the real play was the downside, right? The real play was the 6,400 failed to hold in gap fill, but the second play was the failed breakdown. So if I do this, you can see that the move from the highs to the lows was 1.72%. All right, it's 110 points. So going into the close, when premium is cheap, where even 5-point bounce could mean that you can get a 100% trade in, that is what I look for an end of day trade. And so that is what I did yesterday. So I was targeting 6,315 to 6,310. A little bit of a kind of a break, extension through that, and then recovery. I was willing to be a little bit more risky. I got in right above that 6,315. I took 6,325s and I did that. Yeah, so for my first trade was 6,325 at 280. And I took it into the maximum kind of exit was at 9, which is 221%. And so you can see that we did move from 15 into 30. I exited all, I believe, around that 30. I was waiting for that 6,325, which is this 10-minute candle back test. I rolled, so using profits, I took the 6,330. I was looking for a push into that 6,330. We talked about it in live, but if we break that 6,330, we could see a move into 6,350, eventually 56, which is the previous day low. And so that was my target. And so if we do indeed get this fantastic squeeze off of this low, that was my ultimate goal, 56, via this 48.50 area, which I have two blue lines here just to kind of illustrate. What did happen was that we moved into 6,350. This is not only a psychological level, but it's also this low from this candle over here at 1:30 p.m. So I traded 3 different strikes, the 25, the 30, and the 35. All of those were, very nice trades, but that's besides the point. The point is that if you can think about the S&P 500 and the ES futures in a way that it's an interplay between the two. If you have a good grasp of what a failed breakdown is, if you have a good grasp of overnight session, the highs and the lows, the look above and failed, the failed breakdowns, the end of day spike base to look for. If you can take all of these different pieces, you can put it together into something that is very powerful, that allows you to catch these kind of trades over and over again. And I've been doing it for many, many years. And although it is 0 DTE, which is the highest risk of trading you can do with options or generally, I think there's a lot of edge here. There's a lot of gains that you can make from this kind of approach. So I hope this video was helpful to you all. If you have any questions, feel free to add it to the post. And if not, have a great rest of your day, and thank you for watching.